Hi, Aziza. Are you going through the slides now? Because you are on mute.
Shauna, you could have told me a long time ago.
Oh no, I was thinking maybe you were prepping the slides. That's why. And then I saw it moving and I wondered, oh, Anna, I think you're on mute. Sorry, man.
I'm just gonna continue because the other slides you can read it. Okay, then you get the profit sharing ratio. If you apportion it, the old ratio to the new ratio, the new gaining ratio, the new ratio minus the old ratio. So example, A and B share 3 and 2, C is admitted for 1/5. The new ratio is 3/5 times 4/5, which equals 25, 12/25. Then B will be 2/5 times 4/5 equals 8/5, and C will then be 5/25. You can look at that in your own time. Dissolution, there's an agreement, expiry of term, death, insolvency, court order. Steps, you close the books, you transfer assets to the realization account, you sell the assets, you settle the liabilities, you pay partners in order of creditors, loans, capital, remaining profits or losses. Righto, liquidation, all assets are sold, liabilities and balances is distributed. The piecemeal distribution, gradual payments made as assets, proportionate capital method, and the maximum loss method. The liquidation account, all assets at book value. You credit your liabilities and your partner's capitals. Cash from sale of assets credited. You debit your expenses, and the balance is distributed amongst the partners. Okay, and then you have recording of changes in ownership. Then you have admission, right? The new partner's capital goodwill will be recorded. There's a retirement settlement from business assets, the other partner's capital loan accounts, death, deceased partners, executors credited, and adjustments, reserves, revaluation, undistributed profits. Okay, so let's rather look at an exam type question. Shauna, using the same one that the same spreadsheet that we used on Saturday.
Yes, that's
Okay.
correct. Aziza, can you just give me permission, please, to
Oh,
share?
sorry. Where's
Ruby?
your name? Okay, let me just make you presenter. Change. Okay, there's it going. So here's an example, and this is how our classes normally work. Shauna was with me since last year, not because she failed, she was in a different class. I don't know if anybody else know me. None of your names look familiar. Okay, so what happens now is it's teamwork now, right? Because this is an exam type question. Shana, is it possible if you can copy that question or attach it into the chat? Let me just see.
I can do that. Did you email it to me, Aziza?
Yes, I did.
Oh, okay. Yes, let me quickly open my emails.
For the people that's new, if you look at the tab, the first tab, Shana will let me just see. The other example, the exam type question. Let me just see. Okay, I've copied it there, but I don't think that's a nice copy. Just see if I can snip it. Okay, for those that need the question, they have snipped it rather. 5. Okay, so let's give everybody 5 minutes, like in an exam, to read through this. Where's Andiswa or Andesile?
I'm not sure. Maybe I'm just gonna pop her a WhatsApp because she usually joins. Let me
Yeah.
scroll.
Okay, so we're gonna give everybody 5. Should I give you longer? Or we slow readers. 8 minutes, 5, 6, 7, 8 minutes to read. How long do you need to read this question before we start tackling it? Or you guys start tackling it?
I think 5 minutes is good. It's good.
Okay. Please help Shana. Shana is not going to do it on her own. You guys must give input to Shana, okay? What she needs to do. She's only typing it out for us.
So if a girl is attacking you,
Where is it on mute? You must read the question in the meantime. 238-283-85906-506. You must read the question. Are you reading the question?
Must I read it now, Aziza?
Yeah, let's begin and then you can read
Okay.
it.
Cool. So, okay, we have 3 partners. So we're working with a partnership. Profit and loss ratio. So I noted this down for us. Bob and Morgan have been struggling to agree on matters affecting the day-to-day operations. The partners have consequently agreed to dissolve the partnership as piecemeal as from 1 October. So let me just quickly say here, new. So we only, the partners have, okay, they dissolved it completely. Okay. Then we have the following info. The partners agreed to distribute the cash received from sales of assets immediately, while maximum distribution was made to the partners. Would the partner be required to refund to the partnership any amount he had received? So on the top of my head, this is a little bit weird, but I'm thinking we'll just use the ratios. Number 2, partner's loan account is to be transferred to his capital. Okay. Partnership had taken out an insurance policy. The surrender value of the policy is this and is to be paid to. Okay. The partnership reached an agreement, settled before this grant of 10% will be granted. 80% of the clients, okay, sold for cash. So it's piecemeal liquidation, only the 1st to the 12th. So we only do the first one. And then it says shows all calculations. Okay, I've done piecemeal liquidation, but the dissolving the partnership is new. So first step, we draw up our table so that we can record our adjustments. So let me just quickly do this for us. Okay, cool. Now I've placed everything I think in here, so I'm just going to quickly make it. And then another quick check that I like to do is just to identify each account, what it is, an asset, liability, or equity. Let's quickly do this one. Which one is PPE? Hello, assets there. Okay. Investments, I'll say it's an asset. Loan from, so we are borrowing it from, I want to say liability. Long-term loan, liability. Debtors, asset. Bank asset. Asset replacement reserve. Asset.
I'm not quite sure, Shana, about that one.
Okay, let's mark this one. This is a weird one. I'm just going to make it red. So there's a reason why I identify these, but it's not a train smash. Usually it helps me. Okay, cool. So now we know what it is. So let's put in our balances. So PPE 202, 123. Investments 100, 123. Loan from, oh, I must say from who it's from. Oh, it's cut off. Loan from in. This will be important. Let's do this. Here we go. Loan from Morgan, 12,000.
Look at what Karis is saying there.
Oh, I haven't have my chat open. Let me quickly check.
He says he thinks asset replacement reserve is equity.
I think you're right.
Yep.
Yeah. Okay.
He must come to the front of the class. He must
Yeah, put
open up
on
his
your
mic and talk.
Yeah, here it's chilled. I make mistakes. But that's how we learn. Cool. So equity now we know what's going on there. Long-term loan, 80,000. Debtors, bank debit, so it's a good balance. Asset replacement reserve, 21, 23. Working capital, 3. Let me just quickly, that I don't make mistakes again with the zeros. Then we should be good. All right. So now let's make a timeline. 30th of September, so it's going to be the 1st of October. Let me somewhere say 2010. And then we have the 1 October 2011 that we ended. And then we have 30 September 2011. Okay, now I think all the admin stuff is done. Number. Okay. Additional information. Number 1. Okay. The partners agreed to distribute the cash received from the sale of assets. Sale of assets, so we're selling everything in such a way while the maximum distribution was to be made to the partners. I'm a bit unsure what this means. Under no circumstances would a partner be required to refund to the partnership any amount he had received. So, yeah, as I said, I haven't done a dissolve of a partnership before. Would you guys agree? Since this is a dissolution, we're going to sell the things. So we first need to pay off. I don't want to pay off yet, though. I want to. I'm
No,
not sure
first
if we need to.
sell.
Either there's assets and then we distribute it. We're not going to pay our loans yet.
No, I think we need to first sell the assets.
Okay. We are selling what? Sale of
Or
assets.
record the sale of the assets, yes. The ones
So
that
this means
are
if
dated
we.
from the 1st of October to the 10th. I think it's the 10th.
Hello, can you hear me?
Yes, we hear you.
I think if I remember correctly, there's usually 4 steps I do prior to liquidating assets. That is transferring the current accounts to the capital accounts, which in this case is not applicable. Then it's transferring reserves to the capital accounts, and then goodwill closing off to the capital accounts, and then drawings. On this case, loans is being closed off. I might be
No, we need
mistaken.
to close off the loans. I have it like that as well. So dissolve. Let's do that because this is additional information and they did tell us here partner's loan account to be transferred to his capital account. So we know that this one we're going to close off the
Shana,
capital, but this
Shana,
one we need to
Can
pay.
I just say this, right?
Hmm?
From my understanding, as the guy who said before, you need to close off in the current accounts and the goodwill to the capital. In this case, we don't have it. And then the next step is to record the sale of the asset and distribute the profit in accordance with the
To
ratio. I'm not sure if
okay.
I'm wrong.
And I think, yeah, my only concern is with the liabilities. I thought we need to pay that first before we give. But now we have a bank. We can't pay off the liability.
No,
So we need to sell first.
we first need
Okay.
to sell, and there also
Next.
needs to be a bank column before the assets, right? Yeah, there's a bank column that's missing before the assets. Oh,
Oh,
okay. Okay, I see
sorry,
it. I
I
see it.
placed
Sorry,
it
I
the
didn't
wrong.
see it. It's my
I
bad.
can make it, yeah.
Shana, do me a
Yes,
favor. That
Aziza, yes.
balance, right? Just amalgamate it. Otherwise, it's confusing me as well. So take the balance of all the assets, which was your 202. Just no, leave it like that for yourself. And in the
Okay.
next line, in the next line,
Oh, I
uh,
must just bring it down.
yeah, in the next line, just write balance before the or balance at the beginning of the liquidation, right?
Oh,
Then, yeah, then let's add up all the assets, which was your 202 and your 105,000 and your 100,000, right? Yeah. And then
we include bank?
no, don't include bank, keep it separate for the time being.
So we have
Okay, then you have
assets.
one column bank, which is your bank. Then you have your liabilities,
I'm just gonna place it like this.
and then you put the capital accounts of the partners there. Then it makes more sense. And then you continue. That's all I'm saying to you now.
Sure, Aziza, am I doing it correctly? Should I do it
No,
like
no, no,
this?
no,
And then
no,
I
no,
see if it's
no, no,
equal. Oh,
no. Put it in
would you like to take control,
next to
Aziza?
each other. No, wait, hold on. Next to each other, right? Just
Okay.
delete that first line. I think it's confusing everybody. Don't delete it yet. Don't delete it yet. Right. In the
Okay.
next line, write balance at the beginning.
Okay.
Right. That column is called assets. Then you put the 202 plus the yeah, in column
So
L.
I'm gonna say assets
Now,
and
Shana,
I
listen to me. In column L,
Kalmel,
write
yeah.
that, right, the
Assets.
202 plus the 100 plus the 105,000.
I see what you mean.
Then the next column, there where you've got assets, call it bank.
Okay.
Yeah.
So we have
Okay.
this
Now
one. I'm
then,
gonna delete this one. Bank.
yeah. Now the next one is bank, right? And then the next one, you will have your liabilities, and then
Can
you
I
have your capital.
can I keep them separate, Aziza, just for the fact that they asked to transfer the loan to the capital, so then we need to
Yes.
just remove this. Nee. Okay, cool.
Okay, but is your liabilities 12,000?
Yo, maybe let me check.
You must, the 80,000 you must add.
Loan from long to. Okay, let me add it. Okay.
Yeah. Now you have the capital account of all the partners.
Okay, liability.
You see, so you start your question like that, the balance at the beginning.
Okay, and then I can keep this
Delete
equity.
that. Yeah, delete that for the time being. Then you just have your capital of all your partners.
Okay.
And now I'll keep quiet and let the Karis is saying, will we be deducting marks if we disclose them separately? As I learned to have
Mm,
separate columns for each, track it better rather than grouping it.
mm. But it doesn't matter. We can. And asset replacement reserve, Aziza, we also add this one
Yeah.
under capital. Okay. So this is now a little bit different than what I'm used to, but it's fine. We'll figure it out. Ooh, does this look more just quickly check something. Okay, cool. This makes sense. Assets is liabilities plus equity, so the first part is correct. Now, Okay, so now additional information. We said we need to distribute the cash. So, okay, we are going to sell all of our assets since we don't have enough money to pay off our liability from the bank.
Shana,
From
where's your capital accounts? I want to see your capital accounts.
Yes, I was about
Separate.
to say, so
want-
that when we're distributing the profit, we can distribute it properly, yes.
and then I'm just gonna keep this.
Just take out equity, then you write capital accounts of A, B, and M, whoever they are.
Okay, here it is.
Take the asset reserve out also for now.
Like this.
Yeah.
Okay. So asset reserve, we can close that off to capital and then we close off assets as well. Or what do you guys understand from this question? Distribute the cash received from the sale of assets. So in my mind, it's this. Then let's say sale of assets. Maximum distribution. I don't know what the, okay.
Remember, Shana, your reserve, you're gonna write it off across those three. Okay?
So it's
So
first
for
the
that,
reserve.
leave the
Okay.
reserve for now. Leave the reserve for now. Okay. So now we've got our asset, we've got our bank, we've got our liability, right? We've now calculated that. We've got our capital of B, Bob, and who's the other one? Morgan, Marley, and A. Right. Now,
Yes.
next, apportion the reserve. And I'm going to keep
Okay.
quiet. Andelia, help her out now. And Carl Lambrecht.
Alrighty, so we know number one, asset replacement reserve is equity, so it's credit. We need to close it, so we need to debit it, which means if we carry it over to capital, we are going to debit it. Am I speaking nonsense?
Sounds like it.
So we need to subtract. No, asset replacement reserve is equity. Okay, so
Exactly.
it's equity,
So you
yes. So
only,
it's on the credit, but now we're closing it off. So we're going to debit it. And then when we carry it over, we credit it. Sorry, I was speaking nonsense. Okay, so this is going to increase 20,000, 1, 2, 3, times the ratio. 20,000, 1, 2, 3, times the ratio. 20,000, 1, 2, 3, times the ratio. So we agree capital increase, eh? Okay, should I maybe, I don't want to, okay, let's quickly just tally it up so that our stuff stays in balance. Some, okay, step 2, are we going to sell all of the assets now, eh? So number 2, okay, we proportion the
first,
reserves.
Shana, first tally it up now also again. Because you haven't got the reserve that you apportioned. You need to add it in there as well. So you're just going to kind of duplicate that line.
I did do it here. Here's the reserve, and then I tallied it up the capital.
Okay, that's right.
Okay, cool. So this is now our new balances. Now we're gonna sell assets.
Sorry. Usually of
Mm,
these questions, they ask us to disclose liabilities and capital in brackets because it's a credit balance, usually.
I can
Um,
do so.
I don't know if it's in
Oh,
Maybe,
this case
yes.
maybe it's
Yes,
applicable.
you're
easier.
right.
Okay, because yeah, the way I usually do it is I say what it is and then in my head it's debit credit, but maybe this is a
Yeah,
better idea just to be safe. Okay, cool. Beans. There we go. So this is correct. This is correct. We had to tell you this. Okay, cool. We're selling assets, guys. We need, or are we first gonna pay off the liability with the bank? So we're gonna subtract bank and then sell the assets. I guess it doesn't matter either way, it'll go there, nee. Okay. So selling assets, we are selling assets. So I'm gonna say this, which means oh, I wanted to put it in the bank now. But now, okay, it goes to the bank, but then it's paid out to the partner, so the capital will increase. So I'm gonna just say
Shona, I think you should place the what 130,000 that's the carrying amount in the column of the assets, in
yes,
the
I also,
sale of the assets.
yeah.
And then also place the proceeds, which is the amount that we'll be getting from the sale of the asset in the bank column.
okay, yeah. But now 1, 2, 3. Why the 103,000? Ah, 30,000? Where does that
Um,
one come from? Or is this
in number 5 in the adjustments.
oh,
Number
you
5 in
guys
the
are there.
adjustment, it says that furniture and equipment was sold for 130 at a carrying amount of 130, and then the proceeds, which is the amount of money which was received from the sale of the assets, was 132,
Okay, I see.
130,000. I mean.
I forgot now about question 5. Okay, so we sold the assets, we received it from the bank, and now wait, the assets is number 5 the sale of assets, or is this total amount, they want the total sale of assets? What do you guys think? I'm confused now.
So they say that in
Total.
the required route, we must focus on the liquidation that occurred from the 1st of October to the 12th of October. And that's the line in number 5, the first line. That's what we'll be focusing on.
So that
So
means, okay, we only looking then at, so I'm going to delete this. This is 130,000 that we are selling, right? From the total
yeah, it was
assets
sold at the
up
carrying
until the
value
12.
of 130. Yes.
Okay, I'm with you. I'm with you now. There we go. Okay, we're selling it. We are receiving it. Um, okay, and then we are closing it off. Or we're taking it out of bank and then we are distributing it.
Usually
Am I correct in saying that?
I think usually we only distribute it when it's a loss or a
A
gain, not
profit. Yes.
not when there's not
Oh,
one.
okay.
So
So
there's
it's
no, yeah, there's
zero.
no
That's why we're
profit and
not.
there's no gain. Yes.
Yeah.
Okay. Let me someone make me a note. I remember, yeah, for example, investments, we would have then taken the 10,000, split it. Okay. Okay, I see. I see. You guys are on fire. Let me quickly just my notes. No, man, I don't want this. Yeah, it's fine. Okay, cool. I'll just change this thing later on. Okay, so selling of assets. So we're happy with number 1. We got everything there. So now we got it from the bank. Now we need to pay off our liability. And then if we paid off our liabilities, then we can see, then we can go on with the adjustments. Or should we first do the adjustments and then at the end pay off all our things? Just quickly, we first need to pay, what did I do here? Goodwill, processing, whatever. Okay, now I think we first need to do the adjustments. Okay, let's do number
Okay, you've done with
2.
all your assets, Shana? Are you
Yes,
done with
so
all?
they only asked from the 1st to the 12th of October, so it was only the first line.
But isn't it trade debtor still? Isn't that an asset?
It is an asset, but it was included in here. Wait.
No, but we're selling
Oh,
now.
so with the question here, they just said the cash received from the sale of assets, which I understood as only this sale,
But if you look at number
not the whole.
5,
Yeah.
see, where do they talk about the assets? Or
The
the
first
debtors?
one. Oh, the debt. Oh. Okay. Let's quickly then do number 4 before we pay off the things. So, count off 10% will be granted, and on 10th of October, that will. Okay, so the amount that we received, I'm just going to say here, debtors, settlement. So we know that we are receiving money. So the total of money that we received was going to be, where's the, this on 5, all right, times 8% pay, so 0.8, and it's subtracted. So this is the actual amount that we receive from them. Okay, so that's discounted. And then based on the credit side to close off the account. Wait, one of them should have. Or do you guys agree? I can't be wrong. You saw debtors received. The two mustn't be the same. Oh, I know it's my mistake. Okay. This one must
shouldn't it
be
be
105 times 80%. Just what we
yes,
received.
and
It
then
doesn't how much
multiply.
settled. And then we gave them the money that we got or gave them, was now discount. So that's what we actually received. But this is, am I making sense? No.
Just a
Sorry,
quick
Andy, what were
question.
you saying?
I think we should first multiply the 105,000 with 80%, because that is the amount of debtors that have paid, and then subtract the 10% discount from the 84,000.
Oh, so you mean like,
So it will
like this?
be 84,000 times by 10%, and then you subtract it from the 84,000.
Let's see. So like, then you get 75.6.
Yes.
Okay. Bank is what you received. The 90%. 80% times the 0. I agree with this one and this one. Okay, awesome. Okay, debt is settled. Good. Let's quickly just sum it up. And then we do investments and then we can start piecemeal. Um,
Sorry.
yes.
Just a quick question. Do we make an assumption that all the debtors will settle their accounts because the condition says if agreement with all its debtors are agreed, then a discount of 10% will be granted. On the 10th of October, 80% of clients had settled their accounts. So I assume then obviously the remainder will settle their accounts. So the 10% does apply.
Yes. So I placed it here by the bank. So then we know actually minus the 10% with the discount granted. So the total amount we actually received. Okay. And then on the debtor side, the amounts that were paid.
Yes.
80% that's settled.
Yes. Okay.
So then there. So the other one wouldn't be, what would that then be? Allowance to credit losses, but that's a negative asset.
You also get allowance for settlement discount granted.
Yes. And I think allowance for settlement discount, we put it,
We deduct it usually
is
from
it no,
trade.
with bank. No, it's not with bank. So what you're saying is we should make these this one on the asset side the same as the bank, that would what we actually received, the
No,
money
no,
we
no,
actually received.
no. I actually think there is a difference because the
Okay.
actual cash receipt versus the gross debtors, I think there might be a difference, but I'm not too sure about that one.
Yeah. That's a good question. Aziza, this with the settlement discount granted, we don't place that on our trade receivables, right?
That is correct, like you've got it there, the 84 and the
So
75.
trade receive settlement discount granted, we would record that in the bank. Wait, I'm now
Yeah,
confusing myself.
you're
Okay, so it
confusing
goes to bank.
yourself. You're somehow confusing everybody. It's correct like that. So now
Oh,
move on to
okay.
distribute it to your capital, your equity now.
We just have one more left, this insurance thing. The
Yes.
surrender, should we first do this one and then we can distribute name? Okay. Insurance policy, the surrender value of the policy and is to be paid. Is to be paid. To the partnership. So it's an accrued expense. Or would we place it then on the bank? Your right insurance.
If it's proceeds, it will must go to the bank, Shana.
Okay, so we are receiving money from the
Yep.
insurance. Okay. And then, ooh, sorry, there we go. And then they said it's to be paid to the partnership. So then we split it accordingly. So if we receive money, it is debtors. If we close it, debit side, we close it off, it's credit. And if it's on the credit, we need to debit the capital. So this is going to subtract. Do you guys agree? Or maybe
Yes,
wrong.
ma'am. Yes, ma'am, we agree.
Do we agree? Yay. Okay. Awesome stuff. Awesome stuff. Now we can start with piecemeal. Some.
You must close off the debtors as well.
Ooh. Okay.
No. Just, oh, okay, you can, oh, okay.
I just
Why
want
don't
to
you just,
make it separate, then I know,
no,
and then I'll
don't make it
submit.
separate, don't make it separate.
Okay.
There by selling of the debtors, close it off there by line, what is that? By
Oh,
4, column
if
O.
only. Okay. I'm gonna take the bank is debit. So we're gonna credit it. And then the capital is gonna debit. Wait, let me just do the ratios.
37,800. That doesn't seem logical.
Bank,
Carlos Lambrecht, help her out, please.
help me.
Isn't the difference
100.
between the trade
Yeah, bro.
receivables and the bank gets apportioned between the partners?
You
Yes.
are right. Ugh, I am
Oh, it's a wise
okay.
man, eh? A wise man.
Thank you.
Yes. Okay, so we made a loss. Am I right in saying that? Because why? No, it's fine. Hey, what am I doing? Okay. I just quickly wanna see if it makes sense. Debtor settlement. So we received less money than we had to receive. We should have received. So bank is debit. Credit. Credit. Do you agree this is a minus? It lessens our capital. Why am I now unsure? Wait. Debtors received.
Shouldn't it increase
It's a
your...
plus.
Yeah, it should increase your capital.
Okay, so the debtors monies that we received from them. Okay, so here when we close off the account, 84 minus 75. So we got less than what we wanted. Okay, I'm just trying to figure it out now for myself. But if you think logically about it, you got money from the debtors. So the money you will distribute it, I guess. Okay. Me talking to myself. 25. And then I'm just gonna sum insurance and then we are good. Okay. Here we go. Okay. So now we closed off Should we now pay our liability before starting with the piecemeal? Do you guys agree?
Yes, yes, Shana.
Then we did all of the adjustments. Now we can start closing off. So we closed off the debtors, and now we're gonna pay our liability.
Are we gonna? Sorry. I think there was mention of a partner's loan account to
Loan, you're
be.
correct. We're not finished. Nee man. Okay. Yes, okay, cool. So all we're gonna do, transfer loan of Morgan, so it'll only affect her account. So now with the liability, it was 12,000. It's credit. We're gonna debit it, and it's gonna credit. So we're gonna increase it. Me? You agree? Am I correct? So, loan from Morgan. What is a loan? Loan is liability, liability, credit. We're closing it off with debiting it. And then if we debit it,
But why
the
is there
other
one
accounts is
entry?
credit. It was only for Morgan.
Yeah, but why didn't you put it under liabilities as well?
I'm getting there.
Oh, sorry. I'll just mute and shut up. I'll just mute.
No, Aziza, no talk. I sometimes talk to myself. Liability. Okay. We're lessening liability because we're removing it. So this is gonna be a plus, so it's gonna lessen. Yeah, okay. Cool. Now I think we're good. Now we're good. Everyone agree?
No, I don't agree. Isn't there something missing, Lambrecht?
Shouldn't there
Let
be
me
a
check.
negative sign at one of the 12,000s? The capital.
Okay. Now the question is why. If we have a loan from there, it's a liability, so that amount is credit, right? Debit credit. Now we're closing it off, so we're gonna debit the amount. Credit. You're right now, and then the corresponding account will have to be credited. So wouldn't it be plus? I can be totally wrong,
You are, and Carlos is
but
right.
why? If I try to um figure it out just from principles, it should work, shouldn't it? If it's a credit, we're debiting it, and then if we transfer it, we credit it, isn't
Remember
it?
it's transferred, so the opposite kind of applies. So you're
Yeah.
debiting the partner's loan because you're transferring it over to the capital. So the debit will have a credit. So then obviously it's going to be in the capital side.
Capital, which
Yeah.
is a credit, so it's gonna be a plus.
Uh, well, technically speaking, but in this case, we have to show a negative because you have to disclose credit balances as a negative.
Oh, sorry, I see what you mean. So all of this should have been negative, is what you're saying,
No,
because it's
remember,
capital.
but in some cases the capital decreases, so we have to remember that as well. Yeah.
Okay, I don't know about that. Okay, I'll just look it up on this. Okay, oops. What did I do now? So it's minus 12,000.
Yes.
Okay. I think I'm just confusing myself. Okay, all the adjustments are done as far as I know. So let's start with the closing off of the liability. So 80,000. It's going to be plus. Oh, sorry. Paying it off. And we are subtracting it from bank. Then we know liabilities done. And I guess now we can loss absorption capacity method. Just quickly get my notes. Okay. So let's make it in steps. So step 1, we have cash in the bank. We have assets. Cash is available and we have assets. Okay, so now we're going to use the method. Now the maximum we can use, we look most at the difference. Now we look only at the asset. Okay, so minus this. Everyone agree? Okay. So this is our maximum loss. So now we're gonna split this to our partners, this maximum loss. Okay. This times this.
Shana, but don't you
Okay.
want to do it separate than 193?
How do you mean now separate, Aziza?
Where did you get?
Must I use a different a space?
Yeah, 100
Maybe
and then
there.
50. Yes, the furniture and then do it separate. How did you get the 193,000?
I now literally just took the maximum value of my assets.
Let me see the question.
Isn't
Go back
it?
to the question.
Okay. Scroll down. Record ISO.
Your screen frozen. Oh, okay.
Oh,
Just
sorry.
move.
Okay. Can you see it, Aziza?
Yeah.
So from the 1st to the 12th, so only one.
How did you get that 193?
I used this from my total assets.
The
And I just
50,
took the negative to get
the
0, my
100.
max.
Okay, continue your way. Maybe your way works better. Continue.
Rihanna, okay. Because I guess we have different ways of doing it, so yeah, we'll see how it goes. Okay.
You are right. But I just wanted
Okay.
you to split.
Alrighty. So now this is a large one now. Okay. Now what was this? We split it. Now we see, just quickly check. Okay, now we sum it. And we are going to see the most negative one is this partner. Just quickly check. No, sorry, we're not looking at this, we're looking at this. The smallest amount, but all of it's positive, which is good. Sorry, I'm just looking at my notes quickly to see if I didn't mess up now. No, then that's negative. Then you take the most negative, but there is, isn't a negative value. But anyways, I'm just gonna follow the
Are
steps and
we
see.
trying to work out the interim payment now with this method?
The
Because
first stage, yeah.
usually what I did was I just took the closing balance of PPE and then have a worst case scenario where I credit all my PPE and then they have to like share the um, loss of it kind of.
Yes. So now, what did I do now? Okay, so this is the maximum of my asset. Ooh, it's not assets, it's PPE. Sorry. You are right. I'm using the wrong number now. Okay. So assets, PPE was 202. No, man, but we did adjustments. So I think it should stay that value.
Yes, I also agree with you, Shana, unless
I
Aziza
think.
says otherwise.
Okay. Cool. So then I did split it. So this is the maximum loss. Oh, sorry, not loss, but it goes most now. The debit side. And then when I tally this up, I see, okay, cool. It looks good. And then usually when one of these are negative, I haven't done a positive example yet, then you split that one and then you see if your total is. So I'm going to do that now. I'm going to say, okay, my most, I guess the worst one between the three was this one since it had the lowest. And then I'm going to go and I am going to use my ratio. But now it's only going to be 2.
No, Shana, I
Maybe
think
not.
that's wrong. I think that's wrong because you
We
only
should
do
stop here.
that. Yeah, I think you only do that when there's a debit balance.
A negative, nay, I agree.
A
Because the
positive
first one I'm
balance.
doing
All
one where
of
it's
the balances
positive.
are negative. After you've paid off your liabilities in the capital accounts, they're negative. So if you
Yeah, and
subtract
then
the apportionment of assets and the final answer after you've subtracted is positive, then that means that it's a loss and then you portion the loss. But now all of the answers that you've gotten are negative. So there is no positive answer. So I
but
think we can
the
move on to the final step.
isn't the positive value when you're gonna sum your balance and then your loss and then you see if that balance is still positive or negative. Because in this case it's positive. Isn't it? Aziza, I'm lost.
You can see my answer. I posted the answer there in the chat.
Oh, okay. We shall know.
Can you see it? You can actually just copy it
Yes,
next to your answer at the bottom.
I'm gonna do so. How do I copy?
Just Control C or right click.
Oh, there it goes. Sorry.
I've got another example that I still wanted to do with you. I don't want us to spend so much time on this. You can just see where you went wrong.
Okay.
I don't think you got to the part with the interim payments yet.
No, we are busy with this one, Aziza. I just wanted to know because I may be doing it wrong. Because we got the maximum from the assets, we split it accordingly to each partner, and then when I summed up the balance minus, then I get a positive, which means it's good. But now, should we look at these or should we look at the final?
Look at the final.
But the final is positive.
The final interim payment.
Mm,
But which one are you talking about for the 35,200?
mm,
But you've got a negative nine. What is that? A negative, and it must be positive. You've got negative there. So when you allocate it must be positive.
yeah, I'll just have a look at this one again. I think I'm just a bit
Yeah, just
confused.
rework it with that answer there that I gave you. Okay,
Okay.
I've given you another one. This one should take 8 minutes. Quick, fast. You guys are
Sorry,
very slow.
can I maybe put my solution when I'm done with this question, put it up on chat? I don't know
Put
if
it,
I'll have it correct, but yeah.
your solution, you can post it and Shana can copy it because Shana's
Just
going to
add it.
send the spreadsheet out.
Okay,
Mm.
cool. Thank
Is
you.
your solution different to ours, to mine?
I'm still working through it, but my disclosure is just a bit different. Assets and banks are in the individual accounts rather than grouped.
Okay, when are you going to send it?
I'm busy with it right now, so probably
Oh, okay,
like
you
in.
can send it to Shana and then Shana can just put it in here and then
Okay,
she can send one sheet and you just highlighted that is Lumbring's answer.
okay.
Yeah.
Thank you.
Okay, Shana, there's another one, a liquidation.
Right.
This one should take you quick, fast. Quick, fast.
Okay, George initial.
I would assume you'd get something like this and the other one probably in the exam then. I'm assuming.
Okay.
Because the first one was a bit difficult.
I think I must just practice it more to get used to, I've only done 3.
Do
Okay.
you think we'll get notes in this assessment?
I want to know whether we should scan it in. Is it a written assessment or because it seems like it's written. So then I don't know if we need to do notes as well because it's I don't know.
I'm not sure what you're getting tomorrow.
For me, the funny thing I'd like to know is if we have to know the accounting policies of by all it, like the revenue and its whole description and then all that.
Yes. Yes.
Yeah.
I don't even
Yeah.
need it for tomorrow, but you must know it.
Okay.
Okay.
Don't know. Okay, sorry. They decided to liquidate the partnership simultaneously. So simultaneous liquidation. Yay, this is nice. Okay, then the following transactions. So, what did they ask? The liquidation account and then the capital account. So let's do capital Lisa, then we know we're doing both at once. Okay, what are we doing? We are closing off we are closing off all of the
assets to
assets
the
and
account.
liabilities. Nee? Yeah. Okay, so yes, let's start from the top. Furniture, equipment at cost, and then furniture and equipment was sold for 42. So it's less. No, sorry, we need to, this is, I guess, at fair value. So let me just quickly check. So we know with furniture at cost, so furniture is debit. So we're gonna credit it. So we're gonna debit the liquidation. So this would have been like this, and then I'm just gonna subtract sorry, the accumulated depreciation to get there. Although maybe I should rather split it. Okay. I'm not sure how you guys do your liquidation, but yeah.
Yes, do it like that on the
Nee, not
opposite
to
sides. Yeah.
confuse.
Yeah, if you make a mistake, you're gonna lose marks in the exam.
Yeah, that's the thing, right? I'm gonna quickly check something. Okay, sorry. So now the furniture and equipment was sold for 42 cash. So now okay, Izzy's up there. Liquidation is everything that you are selling goes into liquidation,
Mm-hmm.
which means we are liquidating, so we need to put in everything. So now, what is this fair value? I'm confused now. Sorry, I have to make a bank as well. Okay, but you don't need bank. So basically, then it was sold for cash. So bank is gonna debit, and then we're gonna credit the capital and split it accordingly. Or is it going to liquidation? We are receiving cash, so I assume we want to split it to the partners since we already closed off
I
these accounts, isn't it?
No, we will split the profit or loss and liquidation at the end.
At the end. Okay.
Mm.
So then we are going to place this, it's for cash, so bank would have been debited. So we're going to credit liquidation. Is that what we're saying? I'm just going to say bank. Yeah.
Yes, yes.
Two beans. There we go. One done. Two, motor vehicles. So let's quickly do motor vehicle. Motor vehicles are debit, so you're going to credit it. So liquidation is going to debit. Aha. Motor vehicles was taken over by Lisa as agreed. Value of 41,000. Okay, so motor vehicle is debit, so we're gonna credit it, so we're gonna debit it. Is it gonna be capital?
It's drawings.
You're right.
No, I think drawings go on the other side, Shana.
Okay, let's quickly just check. Motor vehicle was taken, so motor is a debit, it's an asset. We're crediting it. As true, are we crediting it? So we need to debit. Okay. Just have to check that again.
Where's Lambrecht so
I
quiet?
I think of that one, if I remember correctly, the capital gets less.
I
Oh
was
wait,
also
was
thinking
something down the lines of that. Let me think.
the
So it's
just
not a,
so that I
So you
understand
won't
correctly,
account
Lee.
for it in the liquidation
Okay.
account.
you still have to because it falls under the liquidation of assets section because it is going out of the business.
Yes.
Okay.
I
Okay,
think
so
motor vehicles. Wait, there's two accounts involved. Let me just. I have encountered something like this before.
vehicle taken. Vehicle taken is capital
Yes.
in liquidation. I remember an example like that. What was? I think exercise 4.1. Where I get my notes?
Sorry, I think you have to debit the bank and credit the liquidation account.
Debit bank. I wonder vehicles taken. It should be debit, maybe the capital. Just because they say it's
Oh
this
yeah, it's it.
owner.
Sorry.
Me.
Here it says on my notes. Yes, debit capital and credit liquidation account.
Okay.
Yeah.
So then it's gonna be capital. I'm just gonna say vehicle motor taken Visa.
They are a partner of the partnership, right? Is Lisa a
That's
partner?
correct.
Okay, yeah.
Yeah. Debit credit. We're gonna debit. And then
The
I'm just gonna
liquidation
say
account is
here.
actually the contra account for bank. Yeah, in this situation.
Hi, daar kom Louis van die
You
kerk nou
are
uit.
right. Bank must always be 0 at the end. Yeah.
Yep. Louis, you
Okay,
were
but
quiet all night.
yeah, you must have joined us.
Yeah, he was here all the time.
Vehicles. Ayani, vehicles. I'm just gonna say maybe. Okay. So, okay, just to quick recap. Okay, liquidation, debit. Okay, we have a motor. It's vehicles. It's an asset account. It's a debit. So now we are gonna credit that. If we credit that, it means we are gonna have to debit bank. If we debit bank, we debit capital. Yo, I'm gonna know. So it goes from liquidation to bank to capital. The flow. I think bank to capital. Let me just quickly look again at mine.
Yeah, no, you're right, Shana.
Nee, okay. So this is the
can-
rule.
You can move on now.
Okay, let's move on. Sorry guys. Next. Motor vehicle taken, 2 is done. 3. All the creditors were paid and a settlement discount was received. Okay. Okay, let me just quickly go to creditors. Creditors control. Gee, what is that? 3,600. Okay. So 3,600 is creditors. Gonna debit. Gonna credit bank. Now I'm lying. Gonna credit liquidation.
Please help Shana with all this.
Gonna debit. Wait, sorry, let me
You
just
have to debit. You must debit the
debit me.
liquidation and credit the bank.
The bank. What is trade payables?
Sorry, you must also work out, take off the discount there as well.
Yes, and then that will be no, it's not credit losses, sorry, it's gonna be discount. Okay, trade payables. 36 minus 300. Credit. Debit. I must look at this again. Okay, and then we're gonna do bank, but we don't need to do bank. The next one, the inventory was sold for 19,000 cash. Inventory looks like 22,000. Inventory is an asset. It's debit. So we're gonna credit that account and we're gonna debit liquidation. You guys agree? But now inventory in the book show 22,000. In the books, but it was only sold for 19,000 cash, which means we're gonna have a credit loss.
Bank is credited,
Really?
sorry, debited, and the capital, the liquidation account is being credited.
Credited? Nee, okay. It was a credit loss. Is it? Yeah.
It is
Credit loss.
for what it was sold for. That is the
Yes.
income actually.
Nee, okay. So it's not really. It's a loss, but it's not credit loss. No, man, it's not credit loss. I'm just gonna say bank. No,
Yeah.
it shouldn't be.
You can say
It's
bank and then in brackets inventory or whatever was sold.
inventory. Yeah, let me rather do that. Sold. Cool. 3 and then we'll bring it down. Okay, cool. Next, debtor with here comes credit losses now. Debtor with outstanding balance was declared insolvent. His account must be written off. Okay, so okay, let's take the first one. What is a debtor? Trade receivables is a debit, it's an asset account. So we're going to credit it to declare it insolvent, which means we're going to debit liquidation. I'm going to say insolvent, which means we are writing off that 4,200. Okay. Yeah, okay. Second part of the question, his account must, okay, a 10% settlement discount was offered to all the other debtors. All of them settled their accounts. So now that means debtors control was 24,900. What happened? They paid it. Okay. Which
Sorry,
means
can we
trade.
just move backwards to the trades and other receivables? If we look at trade and other receivables, where am I now? The debtors control. So that debtors control must be in that account we must write off that 4,200.
That's correct.
So
yeah,
that
sorry, I did it separately now, but
okay,
we can do it in one if it's maybe
no,
easier.
it's fine.
So
But
I'm going to
that,
do this now for the second line. Oops. Okay, so now, oopsies. I'm going to say here that debtors control, which is 24,900 minus this. Okay, this is what we have. But now all of them paid. Wait.
sorry, we have to work 10%
No,
from that value that you
something.
had there, 20,700. We must actually have 90% of that.
Yes. So I can either place it on the credit side.
No, but
Maybe
that
I
is your
should.
debtors control then,
Credit.
huh? That is
Okay.
actually your debtors control, which is an asset.
Okay. So let me rather than just subtract it. It should give you the same.
Yeah.
Okay, so then we have 19,000.
And we have to
Which
take
was
that other 4,200 we have to take out because you've already brought it into that line item.
accounted for
Yeah.
it. Yes, you are correct. I'm doing it double now.
That's it.
Yay. I'm sorry, I just need to fix this. 4,200. There we go.
That's it.
Happiness. Happiness. And then the last one, liquidation costs amounting to
That's also
6,500 was paid.
it is
Was paid. So bank will be debit, credit.
credited and your liquidation will be debited.
Debited. Nee. Okay, cool. Costs was 6,500. Okay. Now, sorry, I just quickly want to check something. 60 balance. Okay, let's just quickly do Lisa's account as well, and then we can split it, I guess. So capital for Lisa. Oh, I'm reading now. 50,000 it looks like. So it's gonna be balance. And then the current account is also an equity account, which is on the credit side, which is good. So now we're closing it off. Debit, so it's going to be credit on the capital 3,010. Okay. Anything else? Goodwill.
The goodwill, yes.
Goodwill. What is goodwill?
It's
Non-current
3,000.
assets.
Oh,
Asset
right.
is debit, credit. Sorry, no, I usually just in my head. Thank you, 3,000. And then we split it most according to the ratio. So, sorry, just quickly again, it's a asset, so it's debit, so we're closing it, so it's credit, so we're gonna debit on the capital. How's that? Goodwill. Sorry, Andy, what was it? 3,000.
Yes, it's 3,000.
Awesome stuff. So I'm just gonna multiply that by the ratio. Okay, goodwill sorted, vehicle sorted, current sorted. Say asset replacement reserve. We don't use that one. Don't think so. Okay, I think we're finished now. We can close off. Okay. Okay.
Sorry, that asset reserve, isn't that your depreciation account, which is actually an asset?
Asset reserve.
Yeah, because that is
I'm
basically
unsure.
your depreciation that is dropped in there, which is an
Tell me, is
asset.
the goodwill on the correct side?
Let's just quickly check.
Do we
So what
debit
did I
the
say?
capital account?
The
Do we
what
debit
is
the goodwill
goodwill?
and then credit the
Goodwill is an
capital
asset,
account?
right? So goodwill is debit. So we're gonna close goodwill off by crediting it, which means
Yeah.
the corresponding account should debit the capital.
But just a moment, capital. Why is goodwill being debited there and not credited? Because goodwill is equity, isn't that? Increasing your equity.
Goodwill
That's
is a non-current asset.
intangible asset,
Yes.
I think. So how it works is, I think it's how it works. For liquidations, you close off the goodwill because obviously the business is closing down.
Okay,
Whereas in changes in ownership
yeah,
structure, it's not
yeah,
closed off, but it's
yeah,
transferred. So
yeah,
there's a
yeah, yeah,
difference.
yeah, yeah. No, I understand that.
Yeah.
Yes, if you transfer it, it will be part of your credit side, but now it is closing. It is basically you have to deduct it from your capital. Yep. Okay. Thanks.
No problem.
Okay. So
Can you explain
now
that again? Sorry, I got cut off.
If you sell your business and you continue, you will add goodwill to your capital. But actually, now that you close your business, that is how I understand it. So please help me if I'm wrong. Now that you close your business, it's actually a non-tangible asset. So you have to reduce reduce it, and that is why it's on your debit side.
Okay. Okay.
that's a good explanation.
Yes.
Yes, that makes
Thank you.
sense. I usually try to debit, credit, but when you think about it logically, then it should also make sense. Okay. Capital. Okay. So now we are taking that to the liquidation account, right? We just check here. Okay, so we have the balance. Okay, let me quickly just sum up liquidation as well. No man, here shouldn't be a balance. It's capital. Well, you guys must help me out now. What are we doing? We need. Oh, we need the bank.
So usually
Right.
the balancing figure is bank because we're closing our books essentially. The business is shutting down. Whereas normally capital you carry the balance over. Yeah.
Okay, so with the capital, we need to pay it out, which means that if we're gonna close it and pay it out to our partners, this is gonna be bank. Right? This is not going to liquidation.
Your partners have to fund that shortage in your bank account. That credit in your bank must actually come off their capital fund that, so that your bank actually, or your liquidation account zero. So 50% of the shortfall is going to come from each of the capital accounts.
Okay, I see. Okay, so yeah, so if we're gonna pay it out,
The shortfall, we're not going to have bank there. We're going to
okay.
basically have there at where you have bank now in purple, that is going to be two line items from each of your capital accounts, which have to fund
Okay.
that shortfall.
So the shortfall is gonna be this remaining balance that we got from it.
No. The difference between
No.
the 152 and 132, that is going to be split between the two partners, because
Okay,
they share.
152. Oh, I see. I see. Sorry. I see. Okay, I'm with you. I am with you now. Okay. One. Okay. There we go.
No, but the difference that 76. Okay.
Yes, let me quickly just check. Oh, I made a mistake.
No, there's some other problem.
I made a mistake. 152 times my ratio. Oh, sorry, it should be the remainder.
It is the difference.
Okay,
It's a
I
little
see now.
calculation at the
It's
bottom.
yeah, I should have, sorry, let me rather do this because that's why I made a mistake now. Minus this. Yeah. And this amount.
Divide by 2.
My brain is not working.
Okay,
Correct.
just that. Okay, that divide by 2 of
100% correct.
each of the.
Here we go.
That's
There we
it.
go.
So that
Awesome
balance now,
stuff.
it have to be deducted from the capital account. It have to be credited. Sorry, debited on the credit on the capital account.
Okay. Yes, I agree. So this bank, wait, this is right there. We get the balance, we balance it out, it's being carried over. And then with that balance, we put the bank there.
Yep.
Like this. Yeah, okay, awesome. Awesome stuff. Do you guys think we're gonna get close corporations tomorrow?
I hope not.
That's tomorrow. That's yay. Because if we
Okay,
need
I'm
to
gonna
write this
post
out by
my
hand,
I'm gonna post my
Evita,
answer now.
is it
Okay,
looking
can you
good?
post if there's a mistake somewhere? Can you post my answer at the bottom?
I'll do so. Copy. Paste.
Where did we go wrong?
Okay, just look where you went wrong there. It's just
accumulate